Good morning. Good morning, everybody. It is 4:49 a.m. on the East Coast there in the United States. April 2, so April Fool's Day is over, and I apologize because Tina Richards, that was the best I could come up with on that 14, 15-hour road trip going home and getting right into it, getting ready to start work. And congratulations, because yesterday was awesome. Got here Financial Juice. Financial Juice is something that everybody who's working on either a laptop or a PC should have on at all times. You don't have to be on the website. You can as many as times as you want to. If you want to click over here on the right on your tick strike and click on or don't click on your voice news, but tick strike is extremely important. And you can literally just listen to the stock market. No, this is not a plug for Financial Juice. I've not been sponsored by them, but I was I was giggling my ass off when I loaded this page up because they have changed the time. The time was set for 3 p.m. today for Trump to announce the reciprocal tariffs. And they have changed the time to 4. It will be happening after the market closes. Therefore, we ain't got shit going on today, and we are going to be in the Trump tariff triangle.
It will be not a game changer, because that's not a nice enough term. It will be wonderful. It'll be so beautiful. It'll be a gift from heaven if it works.
I'll bring you on to that in a couple of seconds here. First and foremost, SPX, 2 green closes in a row. Bang, bang. Nice start to the week. 54.8873, that big low that you had there on Monday, March 31, taking out the low from March 13th, making you a perfect full moon, new moon, bing, bing, ding, dong. And yesterday's green close, making it up to 56.50. Therefore, allowing for all of the credit spreads which were shared on the put side to have paid out generously. And I have to change that color because, again, I am tracking this plus 10% level year over year. But we do have a green month. We are up 0.63% for the month. And the monthly candle is 55.9753, which I shared already about, but I will get into a little bit of that here as quickly as I can. So we will get off of this trade page and go to here because I know today is Wide View Wednesday, but I apologize. I had that road trip that I had to take. I am not going to be able to do Wide View Wednesday today, but I will make sure that it is done next week. However, yesterday, actually, there was quite a few, so let me find it. There it is. Not in the alert room, but we over in the spreads room. And where are we yesterday? Yeah, starting off here. Wow. Let me lower it down a little bit. But yeah, anyway, yesterday, like you saw, looking at that, the safest risk, 1025, 5560, 5565 is $2. The infamous 5595, 5600, $3. The April candle mentioned. The gap has been filled. Your 5630, 5635s will get better at 3 because they were at 4. They were at even better than 4. And as we got to that 5637 perfectly, we don't need to be on that anymore. We can go on to the charts because we can get onto that later. Boom, here we are week to date. Boom, boom, boom. The big low coming there at 9:45 in the morning on Monday. Imagine that. With the low yesterday coming at 10:20 in the morning. Imagine that. The 9:50, 10 o'clock algo in play. Ba-bang. Plus 100% move or 100-point move there on Monday. Almost plus 100-point move over here yesterday to 56.50. And look at that. Look at that. That final candle of the day. The final little 5-minute candle of the day. The high touches 56.30, 672. Just to avoid getting cooties at 56.37. But from a clean view on this, just a clean view, this is not bullish. This is not bullish, not in any way, shape, or form. We can literally just come over here and go dink, dink, okay. We do not have a break above the 100 extension from the move from the lows on Monday. However, as I will share and will continue to discuss, we are extremely wide view oversold. So following the structure that I've been following since the beginning of this, and how we had the nine waves down to look for that bottom there back on what was that March 13th, so perfectly. And the move up failed as we had that 2 weeks of going nowhere. We did produce that green weekly candle to get off of the red weekly candle count, but we failed to break up above 5,800. And then that sell-off taking place last week. Bang, bang, bang. We've got a perfect little 200 extension visit over here with the lows over there on Monday at 54.8873, 5500.06. So the view at the moment, what we are giving credence to is that this is a flat wave B. Therefore, we still have the slightest of chances. However, we are still looking at getting a bounce to the upside, the bare minimum bounce being the 200-day moving average, and we'll scroll off onto that next. So here I am looking at the gaps chart. This is only gaps, nothing but gaps, gaps and gaps only. And all that you can see here that I'm looking at is the lows from August, just so everything fits on screen. And as you can see here in red, which if I have to change it, I will. Do I need to? Yeah, sure. I'll make it wider so it's easier to see. I screwed it up. Anyway, you got the point. You know what? We'll just, you guys have jobs, and because you have jobs, that's your fault for working for somebody else when you can be supporting yourself trading. Anyway, here we go. I fixed it. This is the lows from back in August, and the only ones that we are watching right now with this 10.72% decline on the market. Nothing looks bullish at this, nothing whatsoever. But as you can see here, your 50-day moving average aggressively moving to the downside, with the 200-day moving average continuing to grind upward to the upside, quite obviously, because it's 200 days, not 50 days. And what you are going to be embarking on sometime here in the latter part of April, early part of May, is the death cross, the 50-day moving average crossing down below the 200-day moving average, unless there is a very aggressive, very quick rebound, which the tariffs could do. Well below down here, I have the 400-day moving average. Not that it is significant in any way, shape, or form, but it's just something that I use as a bigger, broader, wider view gauge. And as you see it down there at 52.86. So we are not out of the woods in any way, shape, or form. But now what I have for you here is the monthly candles. And I'm only looking at 10 years. I can go back much further, but it just doesn't look nice on the screen that I'm trying to share here. And you can do it on your own. It's just a couple of clicks. Go on to the monthly candle. Look back as far as you want. But back here, when Israel invaded Gaza in October of 2023, y'all remember who were here, how we got short in July. And then we rode the short down, got short again in September, and rode the short down. And right there, prior to Israel invading Gaza on October 27th, 2023, we were long. We were long for the bounce for many reasons, but one of the reasons was because we had 3 red monthly candles. We had 3 red monthly candles back here when COVID took place in 2020. We had 4 red monthly candles back after the Lucy passport extravagant fucking bouncing around back in the latter part of 2015 into the very first interest rate hike of Janet Yellen back in December of 2015 into the OPEC fucking war with one another and oil crashing to the bottom into February 11th of 2016. 4 red monthly candles in a row. We've got 2 heading in here into April. And, being a betting man, I don't see us getting a red monthly candle for the month of April. So that's what I'm looking at. Whether or not wide view, we have another wave to the upside. And this over here is, what was that? Where was it? Something's wrong here. The number count. Whether this is a wave 12 and we have a wave 13 to the upside, that still long way off from being able to decide that from the wider view for the bullish support. So anyway, here over on QQQ, looking here at a 10-day, 10 days where we failed, just barely failed to touch the 200-day moving average back there on March 25th. Poof! Incredible sell-off. Incredible sell-off. Making it to minus 15% from the all-time highs. And this bounce that we have coming off of Monday, coming right to that big 473.51. You can see the 473.51 back here on March 21. I'm sure you could see it even more if you zoomed out. And what this pivot is it is your 23.6 retracement from the 2022 bottom. Right there. Want any volume on that? So again, 200-day moving average moving way, way up there into the 490s. Minimum, I would expect, thus why I pushed out that alert yesterday. Looking at this from a zoomed out view of the decline, again, same thing like with the SPX. Very, very possible that we have here a flat. We had our drop down. Boom, that's completed. This could easily move the C over here, the 4 over here. Very simply, this is your A. Here's your B, and this is your flat C. So you have your flat, and boom, there's your C bottom. These are your gaps. Your gap has been filled. That gap to the downside. That gap was filled last week to the downside. The weekend gap has been filled. I am pretty sure that there is a tiny little gap that is right over here that I am going to need to move over to right on in that area. Very, very small gap. I mean, tiny. But anyway, still, the view is the 50-day moving average making an aggressive move to the downside while the 200-day moving average slowly grinds flat in the mid-lower 490s. This as well, come April, come May, with earnings coming at the end of the month, is going to also be making a death cross latter part of April, early part of May, even with the bounce back up into the 500s. On to DIA, not much, really, not really much. I mean, DIA is kind of holding everything together right now. DIA, the Dow Jones is being the adult in the room, and your IWM, being the red-headed stepchild that it is, made contact with its minus 20% from the all-time highs. Made it, touched it. So we will be moving that down to 195 and again making this so that it is perfect. No mistakes. 49. What we're looking at here on the rebound is very obviously what we already know, which is the 207. But as you see, the 38.2 retracement tags out here to 214. And I already have in gray over here for that 213 area because this obviously did not work. And if you look at this from a clean point of view, without even drawing, you can see a 1, 2, a big 3, a 4, and a 5. So this downside move should be complete as well, having made contact here with the big one, which is the 23.6 retracement to the 2009 lows, right there at 194.85, although I'm sure that this goes up a fractional little bit higher, because we had that fractional little bit higher move. And there it is. Perfect touch. 195.25, 195.49. Call it perfect. Minus 20% line made contact with. The IWM is where you will have a majority of your upside to play with. So that's what I got for you on the chart view itself. I will bring you back to what I had on screen to get started with so that you can get your day going and go and get into work. Dow Jones 4-hour was extremely, extremely oversold as we went into the week. Here we are, just fractionally recovered. Same thing over here with the NDX. Zoom out a little bit. Extreme oversold as you went into that low there on Monday. And here we have green, 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 green. All green 4-hour candles. Very similar to what we had going on here as we were putting in the highs a week ago. Over on the SPX, same thing. As we're looking here, extremely oversold on your 4-hour. Your 4-hour is going to give you your bigger, broader, wider view to things so that you have a better understanding and an idea as to how much confidence can you have in going out 2 months, 3 months, 6 months into a calls play because you know you're going to be getting a bounce. Over here on the 1 hour, again, Monday morning with the big move down, extremely oversold, making a nice recovery, but nowhere near overbought. So I will finish off with this and leave you with the simple charts for dummies kind of view. We'll bring you back over onto our screens over here, and I have for you here the Dow Jones. I am looking at this on the weekly time frame. Never mind the moving averages because these are the 50 and the 200 on the weekly moving average. And as you can see over here on your RSI over onto the right, extremely oversold, having been visited 2 weeks ago, and we have a fractional buy divergence over on the weekly fractional buy divergence. As you see, to compare back to historic times, your visits into oversold on the weekly and the results which have come from those. Come over onto your SPX, and again over here a little bit louder with the screaming and hollering oversold as we had those sell-offs 2 weeks ago, back on March 13th to 55.04, and what we had there on Monday coming into that with those multiple number of red weeks that we've had in a row. Again, moving averages, nothing to be paying attention to, but what I have drawn there in green is your 57.05. And as you can see just very clearly, 56, 69, 90, 67 being your highs back here in July, and then your lows over here back in January, 57, 73, 31. So that's going to be your congestion and your confidence zone. 5670, 5770, that's where something needs to be decided on. Over on the QQQ, again, extremely oversold. Extremely oversold. And as you can see here, just for, again, comparison views, the 50 weekly and the 200 weekly almost converging and crossing way back at the end of 2022, beginning of 2023, and euphoria kicked off. But again, extremely oversold on your QQQ. Same thing on your IWM. Screaming and hollering like a little fucking bitch on a Ferris wheel. 194, 193, 194, 196, 195, and where did you come to? All you got to do is look across that 195 line, come on back onto your IWM and understand the way that the video game works and the algorithm plays around, and that 23.6 retracement going back to your 2009 lows right on there. And that right there will tell you pretty damn good chance that you have just placed what should be your bottom on IWM. So anyway, guys, and I apologize for being late, having to have taken off a day or two. I apologize for taking up too much of your time today, and I hope that you enjoy the suggested video, because that's what I try to do for you, is to make it so that you don't worry about a thing. Because if you listen and you learn and you take a couple of the trades that I share out, everything's going to be all right.